Right, guys, so we'll get started with study unit 8, operational efficiency and business process performance. It's more of a theoretical chapter. There would be some problems in theory of constraints and throughput costing. Overall, other topics, which is just in time, lean manufacturing, ERP and outsourcing, capacity management, value chain analysis, and other process improvement tools. These all are theoretical. Theory of constraints is also theoretical, but throughput costing will have type of problems, more of super variable costing it is. You'll get to know as we go through it. All right. So in between what I'll be doing, I'll be pausing this and I would require you to do a practice session for 3 to 4 questions or 5 to 6 questions, depending on whichever chapter we complete. Going ahead, I assume that you have the access also of the online question bank. Now, just in time. Now, I'm not going to read everything out here, only those important topics I'll be reading up here. Moreover, I'll be going through it. You have to concentrate on what I say and make sure that you have a pen paper so that you write down whatever I say to you. All right. So now, just in time and lean manufacturing, starting with just in time, is more of that the concept comes with we don't require inventory. Inventory is not required for it. You do not want inventory to be there. Now, when you don't want inventory to be there, you want sales happening just like this, on demand. You get the order, you make it, you sell it. You get the order, you make it, you sell it. Or you just go there and manufacture it and then just sell it. Now, for just in time and lean manufacturing, I actually had a concept which I would like to share that with you people. You guys can watch it down here. I'll just show it to you somewhere. I was just seeing it for you people. Customizable color and all. What happens here is you don't want to keep it into inventory. You don't know how the order is going to come towards you. So according to whatever order comes to you, you would make it as required by the customer. So you do it just in time. So just playing it more.
Those bifolding doors allow cubicles to fit into offices where every inch of space is critical. So sharks invest.
All right. Do you guys get that? Tell a yes or a no in the chat section. Understanding how just in time is happening out there, they are making that product just there. They are costing that product somewhere around $6,600. What do you think? Do they need to keep it in their inventory? They won't keep it in inventory. They would always like to manufacture it once there is a demand for it. And now moving on towards lean resource management. Lean resource management is nothing but having those things only which are required in the organization and just removing all these extra things which are required. So what happens here? There is zero machine breakdowns. There is zero, many things come down. Inventory, supportage of the product, that completely comes down in just in time. I hope you guys are getting clarity over just in time. That was one example which is from the Shark Tank episode, which you guys can also watch it anytime. It shows about how people cost their product, how they add margins to their product, and how they go out and sell it. And most of them, they would actually want to go just in time, like suppose online sales, just in time it is. Lean manufacturing, you would actually go through the process of the business. Does it add value? Is it value stream? Is it flow and pull? Do you actually need to put effect in it or not? Do you need to put effort in it or not? Or is it value adding or not? If it is value adding, you keep it. If it is not value adding, you just remove it. Now, what happens? Lean manufacturing, it gives empowerment to every employee. Every single employee will have lots and lots of roles and duties to do. Perfection focuses on making incremental improvement in which process with perfect. Now, when I say this perfection, is not with the exact definition of perfection. It is more of completing of the product, more of completing of the product which is ready to use. All right, that's the role of lean manufacturing and just in time. Now moving forward to role of kanban. Now what is kanban? Understand this. It is a Japanese term which is used for a system of how things go forward. Kanban is type of a ticket. It's type of a ticket. Imagine that you go to a bank or any financial institution, you go there. You just can't go and stand in the line wherever you want. You would go to a kiosk over there. In that kiosk, you'll put down your phone number, you'll put down your details, and then you would enter which service you would like. A kiosk is always there in a telephonic company or a banking institution. You can just go which service you want, and then there would be a token generated over there. Now with that token, you will wait for your turn to come. Suppose you go for a withdrawal token, you take a withdrawal token, you wait for the withdrawal token for your number to come, and then you go to that booth. So it is one by one according to the process it goes forward. Now once that is done, you go towards withdrawal. What happens is he does that withdrawal, he makes a slip, and then he forwards it to whom? Forwards it to the ATM. ATM cannot be that kind of example for Kanban, because Kanban is actually a physical thing which is happening it in the back end. That would be more of computerized information systems, which is an ATM. Here in Kanban, what will happen? It would be a ticket which will pass on from one person to another. Like suppose you have gone to deposit some amount. You took a token for deposit. You stood in the line. You deposited that amount. That banker gave you a token. And what did he do? He took that cash, put it into the cash counter, and he forwarded a token to the person who is going to enter it into your bank account, and then he would cross verify it. So what happens is it is going from one person to another. Like you can see, Kanban means tickets. Tickets, also described as cards or markers, control the flow of production or parts of what the production or obtained in needed amounts at the needed time. So basic Kanban system includes a withdrawal, quality, a production, a vendor. Now this can also happen with a production, withdrawal, or a vendor management system, that this vendor, uh, more of the accounting process or the business process, you can say. What happens up here is it passes on forward. Now when it passes on forward, you can see here it's more of an organization wants to improve in their process. So what they do, they get into the first ordering stage, then production stage, then it goes on further. All right, that's more of Kanban. That's the feature. Now Jet is a pull system. Whenever you get the demand, then only you do that. It's rather than a push system. Push system is you going out there marketing, you going out there, I'll sell. Pull is more of getting the demand and then manufacturing it rather than pushing it towards. All right, buyer supplier relationships, electronic data interchange, that's more often there. Effects on operations. Now what will happen? The operations will have more good things happening. The manufacturing lead time is reduced. You would actually know how much is the setup time, how much time will it take for this manufacturing to take place and things to get delivered, how things can get enrolled faster, how your sales can improve, because just in time you would not be investing until unless you get a sales order. You get a sales order, then only you would be doing the work. Until then you would just be marketing, because to manufacture it requires cost. So you don't need to put that cost again and again. Now implementing just in time manufacturing cells. Like suppose I just showed you the video from the Shark Tank episode. You guys can also watch it. See, what do? They manufacture it once they get the demand. Now their mission is not to sell thousands and millions of units. Their mission is to sell whatever demand they come towards it. If they sell 300 to 400, they are breaking even, and they are even turning into profits also. I hope you guys get that. Now, with that just in time, what you require as a business to grow is a ERP system and an outsourcing system planned ahead. Now, what happens up here? Materials requirement planning, how much materials is required, which department we need to forward the materials which are planned, how do we go ahead, what is a short term plan, what is a tactical plan, how do we push for materials, what is bills of material, how do we actually account for materials, कैसे उसको मैनेज करेंगे. You require a system, a software which can run through it, and that is ERP. As you guys can see here, this is the subunit, quantity required, what does it contain, what is there on hand, then how much would be the requirement, that would be calculated it through a ERP. Now moreover, what we are going to do in the upcoming forecasting and production budgeting, we would be doing these problems also in detail. Now, some benefits of MRP, which is material requirements planning: reduced idle time, lower setup costs, lower inventory carrying costs, increased flexibility in responding to market changes. Same goes with manufacturing resource planning. How are you going to plan? How much is the sales coming in? How much is the orders currently which we are having? How do we manufacture it? It's more of in the system. Now understand this, like how data sciences are booming right now is because of the demand which they get to know about it. Now how do they get to know about this? Because of the systems which are in place. These systems which are in place will generate a structured data through which decision making would be more easy. That happens with MRP2, MRP1. Now, traditional ERP is more of all the resources which an organization is having. How do we place it in the most efficient manner? Every organization will have their own ERP. How do they need to go ahead? How do they need to work out with it? They have it for their own. Moreover, I would suggest keep understand the end what is required in ERP. It's more of a back office function, how the system is going on, etc., etc. As you guys have already done the data science certification, you would be having more understanding about the functionality of the organization. How do we use data for the organization? How do we actually make sure that decisions are made in line with the functions of the business? Those are the advantages of ERP. Now, what's disadvantage? It's kind of traditional and it's kind of costly complexity if you don't have proper knowledge of operating it. Now, current generation ERP, there are front office functions, there is supply chain, there is customer relationships. Now, how do we do that? Is not like nowadays, it's more of supply chain. कौन सा product कहाँ है अभी? ERP, like you order something from Amazon. Where has that parcel reached till now? You are tracking it. You are tracking it through an ERP. You are using the ERP from the front office, and at the back office those guys are updating it again and again. Every second they update it and say that yes, this is delivered, this is done, this product is done. That's how they manage their ERP. Moreover, customer relationship is like how what you're doing, how is it going on. It's more of business intelligence software. Partner relationship, how do we maintain a relationship with the partner, how are things going forward. Those is more with. Now, advantages of current ERP: lower inventory cost. You will get to know how to make decisions. A standardized operation system would be there in place. Whereas whatever is, now, what are disadvantages of current ERP is data conversion from legacy system. People are unaware about it. They don't know how to implement it. Sales decline because of people don't understand it. They say that this is a system generated, whether it may happen or not happen. The attitude of people, training would be required for people who are there. They don't know how to implement it. Now, implementation of ERP may take years and cost millions if you don't provide proper training. It would be more of re-engineering of the complete process of the business if you are implementing an ERP. All right. Now, moving forward, what's outsourcing? I hope you guys know complete details about outsourcing. But here is again, suppose some process which you are not good at in the business, what would you like to do is just outsource it to the person who can do it in the best possible way. Now, theory of constraints and throughput costing. Now, here, in theory of constraints, first what we'll be doing is there is a five step process. You need to know these five-step process in details and finish it off in style. Now, throughput costing will do it after theory of constraints. Theory of constraints is more of a bottleneck. Bottleneck is a problem. How do you identify a problem and solve that problem and make sure that you maximize revenue out of that problem? Because every problem is a blessing in disguise. That's the saying which is there. But here, what happens in theory of constraints, you identify the constraint first. How do you do that? Is nothing but the bottleneck operation can usually be identified as where the work in progress backs up, मतलब बहुत ज़्यादा टाइम लगता है जहाँ पे that place, find that out. Then determine the most profitable product mix given the constraint, that what can be the most profitable, matching it in the short term and the long term. And see the super variable costing out there. Now, what super variable costing is nothing but throughput costing. Now, what it is sales minus variable cost is contribution. That is variable costing. What is super variable costing? Is sales minus material only. Sales minus material would be super variable costing. Now, what you have to do is find out what is the throughput margin, which is the best throughput margin out of this, how would be the best mix of putting it the throughput margin, and then implement it accordingly. Now, what is the third step which you guys have to do? Now, after having the throughput margin available, now how do you have throughput margin? Is make sure sales minus materials only. Maximize the flow through the constant. Maximize the flow through the constant. Drum buffer rope. Drum buffer rope is nothing but, you're holding a rope and then just थोड़ा थोड़ा ढील देते जाते आप उसको, जैसे जैसा काम बढ़ते रहता, you would actually give some ease in it. And then increase capacity at the constraint, increase more production out there. And last is redesign the manufacturing process for greater flexibility and speed. That's how theory of constraint works. And what's throughput costing? Throughput costing is nothing but sales minus materials only. All right. All right. Now, moving forward, you have these TOC calculations, which I want you guys to go through it again. And also, what I want is you guys, I'll be giving you time after the class, after this chapter. What you have to do is go through the practice questions from the GLIME axis itself. Practice questions from the GLIME axis and complete at least 10 questions from this chapter. Now, as we complete this chapter. Now, capacity management, there are different types of capacity in an organization. One is theoretical capacity, which does not have any zero downtime, zero waste, nothing is taken into consideration. It's kind of, not possible, a myth kind of a thing. And then there is practical capacity. Practical capacity will take into consideration of things which, like, setup downtime. There would be problems which are there. In problems, how much time you would be going out, those things will be there in picture. And at last is normal capacity, is the average level of output that can be completed over a period of time. It's more of, taking into consideration all things available. Now, capacity planning, as you can see here, in capacity planning, it more on goes with investment analysis, capacity assessment, how much as capacity of the work is to be done, how do things goes on in setting up the capacity of the organization, assessing how much capacity would be there for the organization, and then setting up your levels of expectation of production. Suppose the capacity level is 100 units can be produced in a month, then the expectation also would be somewhere around that. It cannot be more than that, it can be a little bit less than that, it cannot be drastically less than that also. So you need to do it accordingly. All right. Moving forward, now capacity planning, capital budgeting process, it always depends on, how much capacity you are having to do the work and how much capacity level is remaining. That influences the pricing decisions also of the organization. And if suppose you are at the full capacity, there are always chances of opportunity cost and opportunity lost out over there. Now, moving forward, what's capacity expansion according to business strategist Michael E. Porter? I hope you guys remember Michael E. Porter. Determining whether to expand capacity is a major strategic decision because the capital required and all would be huge while doing capacity expansion. Moreover, capacity expansion is preferred only when the process is completely ongoing. The production capacity process is all ongoing only. What you would be doing there what you would be doing there is everything is fine, all sets up, all processes are going good. What you have to do now, you have to scale it. Now when you have to scale it, you need to put some investment into it. Now to scale that, you require people from outside, you require people who have already done it, investment from outside. Those are the times where capacity expansion is required. Understand this. If suppose you are not having a proper system which is running, you're not having a proper process which is running, if that is not there, then you cannot expand the business at all, for sure. I hope you guys are getting that, what I wanted to say. Now, capacity expansion, understand this, only when the what do you call, the business is having its own process, a foolproof process, a tested model, which is making money, which is in profit, which is doing good, business is already doing good, Then expansion is kind of automation also. Suppose automation, let me just tell you, it is nothing but automation, or expansion is nothing but multiplication. If you have built already a very good system, very good process which is working flawlessly, what happens is when you automate it, it would make you very good results. Suppose if you have a system process which is not producing any results, which is not doing anything, if you expand that also, that is also going to give you the same result, because you are just multiplying it with that. I hope you guys are getting it. Now, value chain analysis. I hope you guys remember what's value chain analysis, which I had given it at the start of the session. As you guys can see it up here, it's more of support activities, primary activities, and the product, in which you add on margin over here. Now you can see here primary activities: R&D, product design, manufacturing, marketing and distribution, customer service, and then you add on support activities, which is HR, information technology, inventory management, plant maintenance, contract management. These all things come together, and then you add a margin. That's more of a supply chain or a value chain analysis. Now what you do in value chain analysis is more of, you go through कितनी कितनी वैल्यू ऐड हो रही है, how much value is getting added, where the value is getting added, how the value is getting added. You would try to get the maximum amount of value. Only when the value is added, you would be actually doing, that process would be there. If suppose any process is there which is not adding value, you would not do that. Only you'll just remove that value chain. You need to go through the value analysis also of every product, every system. Now understand this: these all things must be functioning all together. It cannot be sequential, it must be at a time. Sequential means one at a time. One at a time will not give you results. All at a time it must be. All at a time it must be. I hope you guys remember how I explained it in the first class itself. If not, you can check it out there. Same goes with the supply chain. As you guys can see here, it would be more on depending on how you have created it, at first. आपका जो basic model है, that must be good. If that is good, then it would give the best effect. If suppose आपका basic model ही अच्छा नहीं है, then it would have a backlash effect and not go good at all in the market actually. Last one, is this last one? No, not last one. Yeah, value engineering is more of, is, as I said just earlier, is more of, okay, is this adding value to me or not? This question, this has to pass through. If it is yes, it be there. If it is no, then it cannot be there at all. All right. Now, other process improvement tools is more of process analysis, going through the process, types of processes, process interdependence, what is the problems in the process, how do we solve those processes. This is what you would be going through in process improvement tool. Now, process value analysis is more of activity based management. You would analyze that what exactly is more required in an organization, what's more remaining, what's more pending, what else we need to do, is this the best way. So what happens here is more of a quality analysis is going on and on in an organization again and again. Make sure that as you guys become CMAs tomorrow, you would be required in an organization towards improvement of the organization. How do we improve the organization? That would be your key work in an organization, like strategic analysis, benchmarking, operational analysis, profitability, pricing analysis, process improvement, targeting of your audience. How do you actually improvise in your products? How you would be competitive in the market? These are the things which you as a CMA should be doing tomorrow. Then continuous improvement process and Kaizen is both are the same, which says about continuous improvement. Like suppose Apple phone, when it was launched, it was a revolutionary product. What happened next? Then Apple next model launched, Apple 4, Apple 4S. Then when Apple 5 came, when Apple 5 came, it was like a very big revolutionary product. Then उसके बाद क्या हुआ? There is still continuous improvement. 6 came, then 7 came, 7 plus, 8, 8 plus, then 9, I don't know where it went, 10 came, X, XR, XS Max, something. See what's happening? There's continuous improvement happening. Like Samsung also. Samsung came, then there was Note, Samsung, S series, Samsung, N series. It's going on. What's that? Continuous improvement in the process. Like suppose a car is there. A car, like suppose you can take Mercedes. How was Mercedes 30 years ago, and how is Mercedes today? It has evolved. It has improved. continuously it has improved. I hope you guys are getting it. It's more of active analysis, value adding analysis. If it is non value adding, remove it. Value adding, keep it. Understanding how it goes on. And then BPR is more of business process re-engineering, understanding that the business is not going good or it needs to get a complete makeover. Then what you go through is, changing, improving, and coming up to one process which would be best and dynamic for this. Like suppose in this lockdown, maximum businesses went into a BPI, business process re-engineering, and they came up with many strategies. Now you can see everyone is there online ready with an online model for themselves. I hope you guys can see that online too. Now, benchmarking is more of setting up your own targets, comparing yourself with the best industry standards, and benchmarking and telling that we need to achieve this. And once we achieve this, then only we would be breaking through, or then only we would be going ahead in the market. That's more of benchmarking. Now, last one, cost of quality. Last, is this the last one? I don't know. It's the last one. No, it's not the last one. Cost of quality is more of four types of costs are there. One is prevention cost, second is appraisal cost, then it's internal failure, then it's external failure. Now, prevention cost is nothing but you put down some processes in the system so that you prevent a loss to happen, or prevent a defective piece to come into the market. That's preventive cost. Appraisal cost is more of inspecting and testing whether there is any problem. That's kind of an appraisal cost. Then there is internal failure. Internal failure is suppose you tested it in the organization itself and there are failures coming it in the product itself. That's an internal failure. Suppose you launch the product, you sell that product, like suppose Samsung Galaxy Note 7. That was an external failure. It went off like a bomb. It was blasting. I hope you guys remember that. That's an external failure, loss of opportunity. Now, efficient accounting processes, process walkthroughs, process trainings. What you have to do is make sure that you train people very well in these processes, because if you don't do that, then that would be a big time problem for organizations to improve. All right. So what we are done with chapter 8. What I would require you to do right now is go through the complete not complete actually complete study text which we have just done, which we have just read. Just go through it and then solve at least 20 questions out of this chapter. 20 questions out of this chapter. Take 10 questions and then solve 20 questions and tell me what result did you get in the group itself. Just message me. And suppose if you're having any doubt in this, just go through the video once again. I'll put down this recording in the group. And if suppose you're having any doubt, then just reach out to me. I will be happy to solve it out. All right.